If you have $2,000 right now and you're wondering whether to put it into XRP, stop scrolling. Because what's happening at this very moment could decide how much that small investment becomes over the next 5 years. Most investors either wait too long or move too fast. But those who understand timing, regulation, and strategy, they're the ones who quietly build wealth while everyone else is distracted. This is Crypto Equation. And today we're breaking down exactly what to do if you have $2,000 and want to make it work intelligently inside XRP, based on real data, real developments, and a grounded strategy built for the long game. Let's start with the truth. As of October 2025, XRP trades between $2.80 and $2.90. It's been hovering just below the $3 line for weeks. While Bitcoin and Ethereum have already rallied hard this year, XRP has been in a holding pattern, consolidating, building pressure under the surface. And that's not a bad thing. Consolidation is how strong moves begin. Right now, we're seeing a market that's quietly resetting. After months of hype and fear, the noise is fading. This is where professionals step in. When prices are stable, headlines are quiet, and retail investors are bored. Because smart money knows, quiet phases create opportunity. If you followed XRP for any time, you know its story is different from hype tokens. It's not built for memes or speculation. It's built for utility. It's the backbone of Ripple's payment network, a system designed to move money faster and cheaper across borders. And the legal cloud that kept big institutions away for years, that's finally lifting. In mid-2025, Ripple and the SEC reached a settlement that effectively closed the long-running lawsuit. Ripple agreed to a reduced fine, and the decision that XRP is not a security in secondary market trading remains in place. That single clarification opened doors, not just for Ripple, but for exchanges, custodians, and investors who had avoided XRP for fear of regulation. This isn't rumor. It's on public record. That settlement transformed XRP from a maybe someday project into a legally recognized digital asset. The second big story most people have missed is the technology shift. In July 2025, the XRPL EVM sidechain went live on mainnet, bringing full Ethereum-compatible smart contract capability to the XRP ledger. For years, XRP critics said it lacked the flexibility of Ethereum or Solana. That argument is gone. Developers can now build decentralized finance apps, tokenized assets, and on-chain payment tools directly inside the XRP ecosystem, while benefiting from the ledger's speed and low fees. That's not theory, it's happening. New projects are launching, stablecoins are testing cross-chain transfers, and the developer community around XRPL is growing faster than it has in half a decade. For long-term investors, that matters. Price follows utility, always. And XRP's utility just expanded dramatically. The next catalyst is institutional. Right now, several major asset managers, including Franklin Templeton, Grayscale, and Bitwise, have spot XRP ETF filings under review by the SEC. Some deadlines have been postponed, but none have been denied. That's crucial. When the first Bitcoin ETF went live, billions of dollars flowed in within weeks. If XRP gets even a fraction of that, the liquidity impact could be historic. And it's not just ETFs. Ripple is deepening its relationships with banks, fintech firms, and governments exploring cross-border settlement. The global payments industry moves trillions of dollars a day. Even a small share of that volume running through XRP's rails creates steady, organic demand for the token itself. So we have three forces converging: legal clarity, technological expansion, and institutional adoption. That's why people call 2025 the quiet before the breakout. Let's talk psychology, because this is where most investors lose. When a coin stalls below a round number, in this case $3, people lose interest. But that's when accumulation happens. Whales and funds don't buy when Twitter screams XRP to the moon. They buy when retail traders are frustrated and headlines go silent. This quiet phase is where patience pays. Remember Warren Buffett's line, "Be fearful when others are greedy, and greedy when others are fearful." Right now, most of the market is cautious. That's exactly when preparation counts most. Let's get specific. You have $2,000 and you want to position intelligently in XRP. Here's how to think like a professional. First, don't go all in at once. Divide your capital. Consider allocating 40% now, 30% if price dips toward 260 or 270, and keep 30% for confirmation if XRP breaks above 3 with real volume. That way, you win both ways. You capture value if the market drops and momentum if it rises. Treat this as a long-term position, not a trade. You're investing in a network that's aligning with global finance, not chasing a weekend pump. If your time horizon is under 6 months, you're speculating. If it's 3 to 5 years, you're investing. Know your exit points. You don't need to sell everything at once. Scale out gradually. Maybe take profits at 6, at 10, and leave a small portion to ride long term. That approach lets you capture upside without abandoning potential exponential gains. At $2.85, $2,000 buys roughly 700 XRP. If XRP returns to $4, a level that simply retests its 2021 zone, that's about $2,800. If it climbs to 6, which several technical models suggest for the next bullish phase, that's $4,200. If we see $10 or more by 2030, which some analysts consider achievable once ETF flows and payment corridors scale, that same 2,000 could be worth 7,000 or more. But here's the nuance. The real upside comes from compounding positions and timing the narrative, not just price guesses. If you keep adding small amounts during consolidation, your average cost drops and your exposure grows before the big moves begin. That's how professionals build size, not by guessing tops or bottoms, but by positioning early and holding steady. Now let's be honest, there are risks. No investment is guaranteed. Regulatory delays are possible. Even with settlements and filings, ETF approval could take months or even years. If you expect instant catalysts, you'll get frustrated. Macro conditions could tighten. If global markets weaken or liquidity dries up, crypto might retrace, dragging XRP with it. And competition is real. Networks like Stellar, Solana, and new payment layer projects are innovating fast. XRP must keep evolving to maintain relevance. That's why your edge isn't prediction, it's preparation. Keep your exposure appropriate to your risk tolerance. $2,000 is a strategic entry, not an all-in bet. Treat it like the seed of a bigger position that grows with conviction and clarity. Let's take a quick look back. In early 2017, XRP traded under a penny. By January 2018, it touched $3.84. That was a 300-fold increase in less than a year. Then came years of sideways action and doubt. But during that lull, Ripple built partnerships, expanded corridors, and defended itself legally. The same story has played out across markets again and again. Accumulation, disbelief, expansion. Right now, XRP is in the same phase it was before those explosive runs. Quiet, underappreciated, and accumulating under the surface. No one can promise it repeats perfectly, but history tends to rhyme, and it rhymes loudest for those who paid attention when everyone else was bored. If you want to turn $2,000 into something meaningful, you have to change how you think about investing. Stop trying to guess daily direction. Start thinking in years, not hours. The truth is, 90% of traders lose money because they crave excitement. They need the rush. Long-term investors, meanwhile, compound quietly while others chase noise. Ask yourself, would you rather have 10 tiny wins or one life-changing gain? When you focus on fundamentals, time does the heavy lifting. And in crypto, especially in assets with real use cases like XRP, time is your biggest ally. So here's your simple, professional plan if you have $2,000 today. Buy in phases, secure your assets on a hardware wallet, monitor key catalysts, scale out profits intelligently, and keep learning. Follow that, and you're operating like an investor, not a gambler. By 2030, analysts expect global blockchain settlement to touch trillions of dollars annually. Ripple's network is already connected to central banks, remittance firms, and fintech corridors. If XRP becomes even a small fraction of that infrastructure, today's prices will look microscopic. Now, is it guaranteed? No. But high conviction paired with risk management is how every serious investor builds asymmetric upside. That's what this $2,000 plan is about. Positioning, not gambling. The difference between those who win and those who don't isn't luck, it's preparation. Most people will watch XRP rise someday and tell themselves they knew it. Few will actually have taken the small, disciplined steps early on. $2,000 won't make you rich overnight, but structured correctly, it can open a position in a network that's aligning with the backbone of global finance. The key is conviction, informed conviction. Understand what you own. Stay patient while others panic, and when the next major catalyst hits, you'll already be in position. If this helped you see XRP from a clear perspective, subscribe to Crypto Equation, where we break down complex markets into clear, actionable insights. Like the video if you found value, drop a comment sharing your XRP strategy. And remember, opportunities don't wait. They reward those who are ready before the crowd. This is Crypto Equation, and I'll see you in the next one.